Hi, thanks for tuning in. This is a weekend review for the week ending July 1st, 2022. We're looking at a chart of the monthly S&P 500. We've got new monthly candles across the board. We've got some quarterly closes. And from where I sit, the bears are in complete control. I still do anticipate a nice rally to the start of Q3. But I don't really see much in terms of bullish closes on the monthlies and quarterlies. They're all bearish continuation closes, and we'll get into what that looks like here in a minute. But yeah, so let's take a look at some sentiment stuff first. I do like to take a look at the worst these type of readings. Worst start. Basically since the Great Depression. So it was the, first half of the year close, and pretty much one for the record books. Yeah, I will bring up total retail sales in China, 44 trillion, just insane. Passenger traffic way below trend while number of flights hits all-time highs. Factory production has fallen to levels only lower in 2020 and 2008. You're looking at a tech layoff tracker. So this is definitely something that you should be looking at. Just a year ago, right? There were 80 layoffs in tech, and this June you had almost 20,000. And it was true. I mean, last year everyone was very, very bullish. We can't find enough people to fill the jobs. Now we have too many people employed. And again, I still think this is the ripple effect of COVID and what we've done to the economy as a result of trying to mitigate risk with COVID. But either way, layoffs are coming. U.S. housing prices were still accelerating at the end of April, so the housing market is still very, very strong. The housing market is positively correlated to hard assets, and they benefit in inflationary environments. I do love this chart, the best performing stocks in the S&P 500 over the last 5, 10, 15, and 20 years. The reality is most of these names, they don't make it, right? The ones in the last 5 years aren't the same as the ones in the last 15 or 20. But the point of this is winners that have won historically in the past tend to win again. And one of the names I like a lot and continue to like is ENPH. But also, when these things fall out of favor, like NVIDIA, their PE is so elevated, or their valuation is so elevated, that when the momentum leaves, they have nowhere to go but lower. So pretty much on the quarter, almost every sector was red. And as of yesterday, so as of Tuesday of this past week, all 11 sectors are below the 50, right? So in downtrends, here's another doom and gloom chart from David Settle. Q2 marks the second straight 3% more quarterly decline. This is generally marked the beginning of the last 5 bear markets. That aligns with what we're seeing in the quarterly closes. All 11 sectors down in the quarter. The U.S. recessions since 1984 tend to get way, way higher unemployment relative to where it began. So again, that tech layoff chart, this is what's coming if a recession is near, which most people now think it is. Core PCE price index moved down to 4.7 in May. So that's the third monthly decline that you've seen. And this is the preferred measure of inflation. Fear greed index has just been completely crushed, for the whole year, right? Going back to January, you've had one elevated reading of greed, and since then it's been all fear. But this pattern could break lower. We'll have to see. Either way, it's pretty excessive at this point. The worst 6 months in record for U.S. Treasuries. The worst. That's insane. That's just a stat that you only see near bottoms. And the number of expected rate hikes just continues to decline, right? Like I was calling this out as TNX and yields were topping, that the number of rate hikes would also be topping. And now it just continues to drop. And the reason for that is they don't want to hike into a recession. So the Fed's kind of in a pickle, or at least that's the perception. So yeah, we'll get into some technicals now. SPY monthly close below the previous month. So this is a continuation candle. Momentum continues to decline. ADX confirming the move. That being said, the bands tend to contain 90 to 92%, 95%, a large portion of the trades, right? And when you close outside the band, it tends to signal a breakout. Well, we don't have that here. What we do have is the bottom of the band at 360, a rising 40, which has been the trend going back to the start of this bull market. Captured the 40, backtest the 40, launch, come into the 40 each time was a great buying opportunity. And during the COVID lows, they even closed below the 40 just to recapture it the next month. But the downside certainly is there for them to come all the way down sometime by August and hit the 200, go sideways to lower, and then try to break out of this. But this is a descending channel. This is not a bullish pattern. This is a bearish pattern. ADX is confirming. The daily chart confirming. That being said, you do have bullish momentum here. You did get the 5-10 bull cross that led to an instant sell, and the bulls are recapturing the 5 and the 10. Okay, this is a bullish momentum. ADX is not really confirming this just yet. We'll have to see. But the fibs across the board are telling us that every single one of these charts has the potential to go a lot lower. If you look at the daily, this is the pattern that I see in ABC. And if they hold this 1, 2, 3, 6, the correction could be over. I want that to be clear. And what do I mean by that? There's a 3-wave move that's starting to the upside. Something like this. Again, a rally to start the quarter. And if it's something more than that, we'll learn either way. But right now, that's all we're looking for. And again, whether that starts from here or whether it has already started, it doesn't matter. That's all we're looking for. And the risk reward on the downside, remember, as I'm telling you, it's highly unlikely that they're just going to waltz through the 350 level. They've fallen straight from 455 on the monthly time frame without a bounce, sliced right through the 20. And really what I also want to point out is one of the best, there's a reason each one of these moving averages is on the chart, right? One of the best and simplest trend following strategies is the crossover, right? You enter in the trade when you have a shorter term crossover, a longer term. Well, the shortest term I have is yellow, and the next shortest is orange. But this is the 5 and the 10. So you have the 5-10 cross in June 2020. And since then, you could have remained long, no problem. Until when? Until February of this year on the monthly. And in February of this year, not any time before, not last year, not November last year, not June, just in February of this year, could you have sold short? And you remain short until when? Until that cross happens again. At a minimum, until price gets above the yellow line. And look, you could have just remained long until price got below the yellow line. Look how simple of a strategy that would have been. So I still believe here the play is short SPY. I don't, again, like I try not to own anything in SPY right now. And the names that I do like that are somewhat correlated to SPY are ENPH, which is really an inverse oil play. But let's keep going with the indexes before we cover the individual stocks. So QQQ monthly, she's at the 40, right at the bottom, and this monthly PPO, you can go back to the collapse, you can go back to the .com crash, you can go back to the financial collapse. I mean, this PPO has never been this bearish. And it's akin to really this, right here, the start. When you had that nice separation of the blue and red. Now that's what you're getting here. This is a trend that's not going anywhere for a while. It just isn't. And there is no reason to own anything in the Qs when TNX and yields are rising, when rates are rising. So is it possible that we're going to get a pause in rates? Yeah, I showed you a chart that's the market's pricing that in. We're not going to get as many as we thought, but we're still getting them. And as long as you're getting them, this is going to go lower. So if there's no Fed pivot, which I don't believe there is, then this is going to keep going lower. Despite the blue line that's held for a decade, despite having sliced through the 20 and having no rally coming off the high. Now, what I do anticipate, again, is the same thing over here. Something like this. Big move down like we just got. And again, Qs are down 34%. And then another one here after a little bit of a correction. And then it'll be over. Now, what's the bullish side of this? There's always a bullish narrative, right? This is your running flat. This is your 1. This is your 2. Here's our 3. And we're in a 4. And so even if this isn't an ABC up and is in fact a new impulse and new highs are coming, the highs are going to be sold. I mean, there's just too much damage technically for this to be fixed anytime soon. And you look at the weekly, there's just bearish divergences the whole way. Again, this momentum hasn't been this strong to the downside. The bulls have left QQQ on the weekly. The high in momentum was put in August of 2020. And since then, it has been lower, lower, lower. This is overlapping, and the bulls can't get above it. This is all distribution volume. There is no buying. Where are the buyers? There's none. This is all distribution. You have 1 week of buying, and it marked the top. It literally marked the top. So again, I don't own any QQQ. I haven't recommended buying QQQ. I don't think you should touch this until this downtrend is broken. Until the 5 can cross above the 10 on the weekly, just like you had back here in March. And everyone wants to say, oh, we knew this would be a trap. Okay, well, you didn't know until this week here. You got the signal to buy here, and it happened to mark the top. That happens. Those are traps. But you had an objective signal to use. And then you got stopped out here, and if you'd come back into the Qs since then, you've been dead wrong with every guess, and you never had the 510 bull cross since. There just is nothing here. There's nothing in the Qs. Stay away. SMH, there's nothing here. Do you see ADX going higher as the 510 continues to head lower? I mean, even back in March, you barely got the 510 cross on SMH. SMH has by far been the weakest all year. All year. And she was the strongest the whole time from the COVID lows. You know, and how far can this go? I mean, this can go a while. But I think the 200 is generally where you're going to get a bid. This 182 level is the line in the sand. And if you do this little corrective ABC, something like that, again, it's this 182 level. That's where I think you're going to catch a bid. But even then, why would you want to play the weakest sector? Right? Like, you don't want to try to bottom pick SMH. You want to pick the stocks, scan the market for the stocks that are outperforming, and you want to play those when the market bottoms, not the weakest. All right? Unless you've identified something putting in a long-term bottom. And if you go around here to IWM, you know, some relative strength, right? But this still looks like a rejection at the 200. ADX is confirming that this downtrend is a trend. You know, I mean, but the PPO here is not nearly as bad as it was on SMH. Again, this one looks completely orchestrated. This gap here, what do I mean by like that? This gap here from February 17th, 2020 just got filled and has now been holding as demand. Very interesting to me. Volume is declining, unlike the other charts. Right, the highest volume here is a green candle, and the red candles are declining. I mean, this does look a little different. If you put in the fibs, we've done the 50%, and she's holding the 50%. So as long as she stays above this gap fill at 162 and really the 169 level, this low from the 165.37, these are all the levels that you can use to trade IWM. But again, why? This is a downtrend. Scan the markets for the stocks that are in uptrends. Okay, and everyone was all over XLE. I told you to stay away from this the whole quarter. The sentiment did not confirm that this was a good swing trade. And as a result, if you stayed away, you were not trapped, you were not holding bags. And guess what just happened? The 5 crossed below the 10. The PPO 12 and 26 bear cross, an even stronger indication of trend. The separation between the two continues to strengthen. This is telling me that any rally into the 5 and the 10 is going to be sold. And that this breakaway gap is the start of a new downtrend. Now, I'm staying away from energy. This thing looks done to me. And that's a monthly outside bearish reversal candle. So unless the bulls can close above 93 and ultimately 101, right? This all-time high, this is a left shoulder head, right shoulder. Why not? Now this neckline looks a little funky, but either way, I don't want this until she's above 91, 93, or 101.63. Until she can get above any of those levels, right? You need to wait for price to come back to the 20, $60. Got above the 20, never came back to test it. And was outside the Bollinger Band, had a huge run, a nice breakout from 64 all the way to 90. That was the breakout. It's over now. The trade's done. So if you haven't locked in any profits, you should be locking them in on the rallies. That is how I view this chart. I don't view this as a good buying opportunity yet. Also, the 510 on the monthly hasn't had a bear cross. So it is possible that this continues. You have to keep an open mind. But the weekly is not confirming that. In order for it to go higher on the monthly, it's got to go higher on the weekly first and higher on the daily. And none of this here is confirming higher yet. Not until, from where I sit, she gets below this level, tags the 200 or this blue line. Then she'll have a much better chance of rallying. And if you look at the structure here, I mean, this doesn't look good at all. Not good. 5 can't get above the 10. And you look at DBC, same idea, the commodity ETF. Separation of the 12 and 26, the trend's accelerating, ADX is confirming the downtrend. The 510 can't get in a bullish configuration. What does that mean? Sell all rallies into the 5 and the 10 until they change, right? Like here, you had to buy all rallies into the 5 and the 10 until what? Until price gets below the 5 and the 10 and the 5-10 bear cross. So it means you didn't get to guess the top. It means you got to sell right here. You got to buy right here, you got to sell here, and that was the trade. Now, you can be selling short DBC until when? Until you're given the cover signal. We don't have that yet. Let's take a look at TNX, which is what I like to look at. Still in a clear uptrend. And still has bullish divergences on momentum. So I'm not convinced here that this is done, but I will say ADX is going higher as price is going lower. That is a change. We are below this red line, which has been, the middle of the channel, right? Think of it like mean. When you get below it, you expect to go to the other end of the channel. The Bollinger Bands have contained price for now, right? These bands here, the bottom of the band caught it, which is what it's supposed to do. So that being the case, what's the weekly saying? Well, the weekly's just putting in this 1226 bear cross on PPO, and it looks like the 510 could be crossing here. Close below the 10 is how you get it to cross bear. Has to close below to get the bear cross. So you got to close below. If you're not paying attention here, if you think this is somehow bullish, you're not paying attention. It's not our job to guess if this is a trap or not. It's our job to just look at the data for what it is and react. That's it. So when I look at this chart, I say, well, close below the 10 here, recaptured it right away. No harm, no foul. Are they going to do that again this week? I don't know. And when I looked at this, I've called this out before, left shoulder, head, rally into the right shoulder. So I expect TNX to do a nice little rally. And what's that going to do to TLT? It's going to give you the dip to buy. Okay, now it's possible that this thing isn't done yet. Right? Definitely possible. This is a breakout for sure and is going to rally up here before coming down to set a new low. Also possible that that was the high and she's going to come back down now. But again, she captured the 5. She's trying to capture the 10. That's a sign of strength. That's not a sign of weakness. So, and this is the correlation between yields and bonds, and we've definitely negatively correlated. You can see it here. And so what does that mean? It means you should be looking at bonds. That doesn't mean you should be looking at SPY. I didn't tell anyone to go buy SPY. No one's saying look at SPY. No one said look at SMH or IWM or QQQ. So look at bonds. And when you look at bonds, what does it say? Well, we don't have the weekly 510 cross yet, but this trend that had you sell short here in December looks like it's about to give you a cover signal. And that's about it. The rally up here to 120, until you really get above 120 and the 20, there isn't much to do here in terms of a bottom. Right? ADX is going lower now as price is going higher. That's a downtrend. Everything here is in a downtrend, and that is not going to change overnight. But what did happen here, and we'll turn all the indicators off because I do like how this looks, just in terms of structure and Fibonacci ratios. This is your 10861, the 1.0 extension of wave AB. Right? 3-wave move down, 3-wave move up, 5-wave move down. It's possible this ends at 97.63, which tags this trend line here. It's possible that it hit what it needed to hit. Right? This little broadening pattern here just had to break this low. 111. When she did, she went down to touch the fib and then reversed and broke the high from the previous month. Right? She broke last month's high. Again, that is not bearish. If it turns out to be a trap, okay. But that's the first step towards going higher. It's getting above last month's high. And that's what she did. And so let's move back to what I think is outperforming and what I've showed everyone before. KWEB is still outperforming. All right. And on the monthly doesn't have that 510 cross yet. But on the weekly, we do have the 1226 and ADX going lower, not confirming this move higher. And that is a red flag for the bulls. On the weekly, ADX is not confirming this move higher. She might. She can definitely flip up. If price keeps going higher, that's what will happen. From where I sit, I see declining bull volume, but price is just riding the 5. You know, I've been talking about KWEB since this breakout, since the 1226 bull cross back here, since the 510 bull cross that happened here, since histogram went positive. I've been talking about this since May. All right, this is the place to be as long as price can stay above 28, 29 bucks. That means your risk is about 14%, but really she just has fallen to the 5 every week. And as I showed you on all these charts, look, this downtrend signal came here, stayed below the 5. Stayed below the 5, got to the 10, but closed below the 5. Got to the 10, tried to get above it, failed, stayed below the 5, got to the 10, failed, right? But just is constantly below the 5 and the 10. So if you're now going to use that same logic, but in reverse, that means you need to let it come back to the 10 if it so desires. That is not a sell, it's an add. And really, it is mean. It is the average. And right now, this average is rising. That's what we call an uptrend. And that's why KWEB and the components that are positively correlated to KWEB are things that I like. You'll see something similar with TAN. Right? She's trying to get moving, trying to get above the weekly 40. ENPH is a leader in TAN, trying to break out, continues to ride the 5. I mean, such an obvious stop level here, right? Broke the weekly higher low and closed inside, closed above the 5. Everything that you need to see. Yeah, and like LW is another one. I mean, if she can stay above 71.58, good to go. She's trying to break out on these longer term charts, but we'll see. Still has a way to go. But again, on the monthly, 510 bull cross. On the weekly, 510 bull cross. Right? So this chart has the highest probability to keep going higher relative to something like NVIDIA. Okay, this is just in a downtrend. Just stay away. There's nothing here. Oh, but this is a falling wedge. It is, and it's just going to keep falling. You don't buy in the wedge. You buy the breakout of the wedge. And funny enough, that's when the 510 cross is. Almost always on the weekly. You're not going to get it before breakout. So just stay away from NVIDIA. Stay away from Tesla. Like, these names are in downtrends. Apple, all these names. Why would they not be? Like, they got to get above the 40. Look at the slope of the 40. Look at the PPO. Look at the 510. The 510 can't get going at all because the 20 is the downtrend. So just you stay away from all these names. RBA is another one I love. Just breaking out. PPO higher. I mean, weekly 510 bull cross accelerating. Momentum accelerating on the PPO. PPO above 0. ADX going higher on the weekly. I mean, everything you want to see. The monthly PPO curling up. Right? The 510 monthly bull cross. What does that mean? It means any pullback into $63 is likely to be bought. That's 10% lower. I know. That's your wiggle room for this trip. You have to have some wiggle room. 61.61. So as this week starts, I'm looking to buy at the top of this band, $65. Maybe $63 if EMA 5 is given. Maybe $64.59. We'll have to zoom into the daily and see what's happening. This one looks a bit done for now, right? Like if you didn't get in here or get in here when the 510 crossed happened on the daily, right? You're almost chasing this ADX peak. Now if ADX sets a new high, pulls back to the 5, pulls back to the 10, that's your next entry setup. But right now, to keep in mind, what has just happened is 8% in 4 sessions. I'll go in here and talk about a few more trade ideas I have. VRTX, pharmaceutical company, right? Same look, same feel. Monthly PPO, look at this acceleration, ADX above 20, right? Would like it to start marching higher, but it doesn't have to. Monthly 510 bull cross, just riding the 5. So any dip this next coming month into 270, 250 is a strong buy. This gap fill here, if they come down here to 262, I'm all over it. Again, though, like we'd like to see this PPO come back down to the 0 line a little bit more, but you don't always get that, right? Like let's just say that this is wave 1. Well, here's your 2. You had the retrace. You had the 50% retrace. So why can't that be your 2? And now you're in the next 3, like the next biggest part of this trade. I mean, it's definitely possible. VRTX is a monster breaking out, and it's pharmaceutical. So you have to pay attention to, you know, at least from where I sit, VRTX, ALKS, another one, all the same looks. Is she breaking out of this downtrend? It looks like it. If she can get above 21 or 31.39, definitely. Huge breakout. Kellogg, another one. Look at the moving averages here. It's telling you any dips into these are likely to get bought. And that's a monthly chart. Look at the weekly. Weekly's marching higher. Look at the daily. Breaking out of this, right? Above this line. Above 71. I mean, there are charts that are breaking out and that are moving higher. And those charts are not NVIDIA. They're not Tesla. It's not AMD. It's not the names that you've been watching and playing for the last year or two. You just have to learn how to identify the trend and hop on board until it ends. All right. We're at a little long in the tooth, so I'm going to cut the video here. I think there was a few more. KWEB XLE, right? Like this trade is killing it. KWEB SPY, right? Like go run your pairs. Since March, KWEB has been outperforming. In looking at, you know, Q2, right? The names that have been winning and the names that have been losing. KWEB up 9%. Monster Energy up 15%. LW on Q2. These are the names that are winning. So if you're trying to buy stuff down here, right, you're going to have underperformance. Altcoins, random pot stocks, you know, SMH, QQQ, IWM, all these soft assets are getting slaughtered. And now I know it's a new quarter, and you can go look, you know, maybe month. So if you just go look at June, how did they end them? KWEB, DNMR, PLTR. So some new names here. But really, Monster, LW, it's the same names. And still at the bottom of the list, SMH, pot stocks, energy stocks, QQQ. Avoid those names. Sell short those names. And buy the names at the top of the list. Until when? Until the weeklies roll. That means dips on the daily are for buying. This is the trend. This is how I trend follow. And if you're buying things in downtrends, you're not doing what I'm doing. And you're not following the trend. If you're interested in buying SMH, you're not doing what I'm doing. All right, that's all I got. If you like the content, hit the like button, share the video, subscribe to the channel, and we'll see you in the next video.